Hey guys, welcome to this episode. I'm super pumped about this one because we're going to be talking about PMIs and how to get rid of them, saving you hundreds if not thousands of dollars a year. And at the very end of the video, for the ones that have bought their houses just recently, I've even got a little nugget for you, so stay tuned. Alright everybody, so I'm going to go through this real quick and I'll take you through what I did. So I was on seekingrealestate.com and I was looking at the market statistics and I saw this. This is what made me want to shoot this video. So change from June 2021 up 21.2%. So I want to, and this is the median sales price for Northeast Florida. This information comes directly from Northeast Florida Association of Realtors. And this is directly from there, and so I'll put this link in the bottom so you can come and look. They got a bunch of good information in here, median days on market, stuff like that. Anyway, so what does that mean? What that means is home values have gone up quite a bit. So I wanted to look, since this is Northeast Florida, I wanted to look at what it was doing across the U.S. And so I went to whitehouse.gov and found they're reporting over the past 12 months, the U.S. National Home Price Index has risen by 18.6%. So good news for everybody, right? What does that mean for PMI? PMIs are insurance to cover when you don't have a lot of money down and your credit's not that great. It's to cover if you can't make a payment, the loan institutions can be able to get their money back out. So PMIs cover that. Now, there's a few ways to get rid of them. One, they can automatically drop off or final out, and that's meeting the terms in the terms of the contract. Secondly, you can request them to fall off, and you can refinance out if you have, but it kind of falls on all under the same thing where you have loan to value ratio of 80%. So what does that mean? You have to have 20% equity in the house and only owe 80% on the house's value. First thing I would recommend doing is pull up the terms of your contract, and we'll go through this stuff that we're looking on the screen right now in just a sec. I'd pull up the terms of the contract that specifically talk about the PMI and see if they have like a seasonal requirement or a minimum of 5 years, or if you're an FHA, if it's lifelong loan for the loan, things of that nature. This will kind of dictate what path you need to take. If it's FHA, you should be able to finance out, depending on your interest rate on your FHA and what the PMI is costing you versus what a conventional loan monthly payment will cost you and what it will take to actually refinance that house. Is it going to be worth it? Those are all things you got to figure out, because every single person watching has different terms and different conditions and credit scores and everything. So I'm just hopefully pointing everybody in the right direction to save hundreds if not thousands of dollars a year on PMI. So anyway, I would look at the terms of the contract, see if there's any barriers for you going down this path. Secondly, I would get with my loan officer and find out what are my options for canceling the PMI once you've kind of reviewed it, because then you can start going down the path. They might require, so these are required according to consumerfinance.gov. It must be in writing. You must have a good payment history, be current on your payments. Your lender may require you to certify that there are no extra loans or liens or anything on the house, so like second mortgages. And your lender can also require you to provide evidence such as an appraisal. And that's what I was talking about, or getting ready to talk about. So the appraisal portion. Appraisals are anywhere, these are just rough ballparks, figures from where I'm at. Appraisals are roughly $250 to $500. And when you're talking about a whole year of saving on PMI, or however many years are left on your PMI, that's a drop in the bucket. It's so small. So this is the route I would take. I would look at my contract. If I didn't have in my contract, I would just get a hold of my loan officer, talk to them, say this is what I'm looking at doing. I want to get my PMI dropped off, my payment, and then I would start going through the process. And if you buy your house before June 2021, you potentially could be a candidate to have your PMI dropped off. I hope this helped, and we'll have more videos like this coming in the future, so be on the lookout. Thanks for watching.